Good morning, everybody. My name is Brian Dixon. I'm with Off the Chain Capital. We're a discount value investor in the blockchain space, and I'm grateful to be here with Catherine, David, and Greg. To kick it off, I wanted to maybe have each of you give just a brief background of yourself and your organization. Catherine, why don't we start with yourself?
Sure. Hi, everyone. Does everyone have their headphones on? I can't tell whether I'm at a disco or at a conference, but we're going to roll with it. Katherine Dowling. I'm on the executive management team at Bitwise Asset Management, also serve as the general counsel and the chief compliance officer. We are a crypto asset specialist. We issue products that are crypto related or hold products that are crypto. We were one of the first issuers of the spot Bitcoin ETF last January. Followed that up with the spot ETH ETF. We have a whole slew of additional products that we're trying to push forward, working with the regulators in a new environment that we'll talk a little bit about here today that we're experiencing, and hope to grab those reins and get some more crypto products out there for the crypto ecosystem.
Hi, David Hemming. I'm global head of alternative ETFs for Invesco, primarily focused on commodities, currencies, volatility. And as of 3 years ago, digital assets. We started with kind of equity, blockchain, and Bitcoin assets, Sato and BLKC. We also launched physical Bitcoin ETF last year and Ethereum last summer. So also in the lab, and kind of my experience in commodities, currencies, and volatility is really coming together with some of the things we have in the pipeline for Bitcoin and other cryptos for later this year or early next year.
Hey everyone, I'm Greg King. I'm the founder of Rex Financial and Osprey Funds. It's two separate companies. Rex focuses on TradFi products. Osprey is our crypto brand. We have about $8 billion in ETFs. I've been involved in crypto since 2013 personally, and we filed under the Rex brand for one of the first crypto ETFs in 2017, actually, before the futures existed. We then developed Osprey Funds and have a number of trust products. Most recently, we launched a sort of crypto-adjacent ETF in partnership with Michael Saylor. It's BMAX. It's a Rex Corporate Bitcoin Treasury convertible bond ETF, kind of a mouthful, but that's had a very promising kind of like first and second week. So excited to be here and talk about new developments under the new administration.
So we're seeing a tremendous shift in the digital asset space, especially with the new administration. We're seeing a lot of bridges being built between the traditional finance world and the crypto universe. And ETFs are one of the core ways that we're seeing products be able to reach, through your traditional brokerage or easy on-ramps that people are used to through acquiring an ETF with a digital asset as the underlying asset. So with this huge evolution with crypto ETFs, what do you guys think comes next? Greg, why don't we start with you and then we'll work our way back.
I mean, been talking about this theme a lot. Just the shift in attitude with the new administration is huge. I think a lot of what we do is kind of read the tea leaves, kind of read between the lines in terms of tone and dialogue that comes from the SEC and from regulators. And I think with respect to crypto ETPs, I mean, well, let's face it, you have Trump launching a meme coin, right, on inauguration weekend. So what does that tell you? There's a lot going on. So the tonal shift is huge. I think part of, I wonder what my fellow panelists think, but a lot of this is art, not science, because you'll have a set of rules, and you in the past you would conform to those rules, or you'd put forward a filing that you think and yours think conforms to those rules, and you get the brushback pitch over and over, and so now it just feels like that's changed, and I think you've seen that not only with crypto products, but even a private equity ETF that was put together by State Street and Apollo that got through and got launched, and then the staff sort of said, hey, we kind of don't like this thing, we think it might have some issues, but clearly they let it go through anyway. So I think there's been a very big shift, and I expect to see a lot of crypto products coming out.
Yeah, I mean, I think from our side, it's just how quickly this market is moving and just how quickly it's evolving. I mean, if you think commodities futures started with the ancient Greeks, gold has been used before that. The first indice in equities was in the 1890s. We are going in a digital asset way from GLD to JEPI in less than 15 minutes. That's just how quickly this market is coming to the fore. And I think what we're seeing is what is important to ETFs and what is changing right now in ETFs. And it's been a lot of things like Innovator, Income Fund, downside protection with options, and then also active management. So I think what you're seeing as the themes of the overall ETF market will also be shared by Bitcoin and the other cryptos, and it will happen very, very quickly.
Yeah, to your question of what's next, it took over a decade to get the spot Bitcoin ETF out the door. And part of that was because of the environment that the crypto ecosystem works through. So we're seeing, as the two gentlemen have just indicated, the environment has changed. But what does that really mean? What has held back some of the other digital assets from being able to be placed in an ETF is the classification of those digital assets. We actually thought it would delay spot ETH further. I mean, we had an SEC at that juncture was not willing to even say that ETH was a security or was not a security. So now we have a number of key cases that have either been stayed or have been dismissed entirely. Why? Because they hinge on that very definition. So now that is opening up and we're getting into an environment where it's going to be accepted that a number of these assets beyond Bitcoin and ETH are also not securities, that's where the door gets open for your question of what's next and what is next. Well, there are a number of other digital assets that are going to be coming in, right? So the SEC has a number of issuers have put products into filings right now, and we're all working with the SEC to work through these digital assets, how they work, how they operate. So that's what's happening right now. A number of issuers are meeting with the regulators, explaining how these products work. What also is next is staking, adding staking to these products, right? This was something that we have current commissioners who were behind adding staking before these products were launched, before ETH was launched. We also have in-kind that has to also be layered in. In-kind is the norm over in Europe. The EU's been way ahead of us for a number of years. We've been lacing up our shoes. They're already deep into like mile 10, the marathon. So we're catching up, which is great. But what's next? More digital assets coming in, active management, as you indicated, in a number of areas, and also adding and layering in some additional features that just make these products more efficient, they make them better, and they make them more useful within the, for the market, for capital formation as well. That's what we're seeing next.
Okay, thank you very much. So if we look at crypto integration with ETFs as kind of like a layer 0, there's always going to be a layer 1 of new types of products that come on top of that. And one of the things we're seeing is that in derivatives. So what are you all seeing in regards to option strategies, income buffers, things of this nature that people are actually using the ETF as a launch pad for different types of derivative strategies? David, why don't we start with you?
Yeah, I mean, I think innovators come out with their downside protected product. Calamos and BTCI have their income products. I think the issue is right now is where you have something like an equity product like S&P, you've got the S&P futures, you've got the S&P options, and you can trade around it, and you know what your trading matches what you have. With something like Bitcoin, we now have the CME, the CBOE, IBIT options. So I think what's going to happen is where's the liquidity going to come from? And again, most of these products have started small, some between like 10, 20, 30, up to $100 million. When they become the unicorn, the $1 billion ETFs, which of those kind of exchanges and options are going to be the winners in it, or which ones are going to be the losers? And I think that's why right now you have to take almost an active management approach. And this is the approach you can take in Invesco, where we're launching things with new kind of futures. We've done it in the base metals with things like lithium and cobalt. You have to have the flexibility to go find the liquidity where it exists between usually consumers, or in this case, buyers and sellers. So again, I think you're going to see things that are going to be a little more active, potentially give up some of the income to try and get more of the beta on the upside. Maybe not worry about as much about protection right now. I think most people are in Bitcoin for longer-term capital appreciation until it actually kind of matures into more of that store of value kind of gold type, digital gold element to it. Because right now, I mean, it trades much more like a risk-on, risk-off asset than it does in sacred.
Katherine, what are your thoughts?
Yeah, we've had, because we work at Bitwise, we work with financial advisors and RIAs, and we listen to them in terms of what they're looking for. So we have a product where it kind of turns the switch between treasuries and Bitcoin, because we've heard from some of them that they're interested in putting their clients into the products, but they'd like something that is less of a roller coaster ride if possible. Obviously, it's a volatile asset, but they'd like to see something that helps in that regard. So we can create some of the products around that so that we can meet where they would like to see for their clients. And these are folks who've been already invested in Bitcoin, and now they want to see, okay, well, what's next, or how can we use some of these add-ons, if you will, to help place our clients and certain clients that are already in products that meet their needs a little bit better. So that's what we're trying to do with some of these add-ons.
Okay, very good. Thank you. Greg, you have anything to add to that?
No, I think that's a pretty good summary. It's very the options and futures kind of derivatives ecosystem around Bitcoin, I think in the U.S. especially is extremely nascent. I mean, you make a good point with the initial question that what's it going to get built around, and I think right now it's IBIT, clearly. But of course, we all probably saw the news that Coinbase may be making a play for Deribit, so that'll be interesting to see how the sort of native derivatives development happens, and it'll continue to get built out. We have other products that away from crypto that are covered call strategies and things like that, and so I think that, and my background is structured equity derivatives, so to me that's a sign of a pretty mature market when you start developing those products. And I think I agree with David. Like most people, if they're going to get into Bitcoin, especially advisors, they're going to put in their clients. It's sort of like right size your investment, look at the correlations and all that, and then just go long.
Thank you. So as these derivatives markets are expanding and the ETFs markets are expanding, you guys probably have very unique ways that you look at how do you push new products or how do you develop new products to the market. So could you walk us through, what you're looking at, what you're thinking about in terms of your thought process and structure for how you analyze a product before you put it in the market? Greg, let's start with yourself.
I like your, what is it, LIFO method of asking questions. I mean, we're pretty opportunistic. I think that we have a suite of filings for 40 Act crypto ETFs and on a spot basis. I think that would be a huge innovation for it to do that. Right now, I think the big next thing in crypto ETFs is figuring out how to do an active product or an index-based product that's multi-asset. Right, the 33 Act is not great for that. Someone mentioned staking. That's obviously a huge potential as well. So as it relates to crypto-related ETPs, that's our focus. I mean, I think those are the big nuts to crack, and I think there's a ton of opportunity there. But how we analyze it is, it's pretty straightforward. Everyone knows which cryptos people want based on the market cap, based on what's going on in social media. Certain ones rise to the fore, and those are the ones that we're looking at. That being said, it is kind of interesting to try to prospect and see what's going to be big in the future, because obviously as an issuer, when you're developing ETFs in the S&P and kind of, you're essentially long the market. Well, it's pretty interesting to be long tokens that are going to go up 500 or 1,000%, right? Because for obvious reasons. So anyway, we kind of, we're all over the place and looking at the space and try and look at everything.
David, how about yourself?
Yeah, I think, look, I think continue to build out the building blocks. So, like, you have Bitcoin, you have Ethereum, Solana will probably come at some point this year. And then you're kind of building from that. Like, our core client base, like, especially in alternatives, are the large wirehouses and RIAs. They've only just started the approval process for